Knowing what specific signals we're likely to do allows the candlestick investor to have a huge advantage for projecting where the next price move might go to. For example, there was a big, huge move off the 50-day moving average, indicating the Dow was not going to try to breach the 50-day moving average. And then we had a doji. And we know what happens after a doji. The price usually moves in the direction of how they open it after a doji. And in this case, when that happens, it's usually the same magnitude as this day, the following day. However, as we saw on Friday, it only came up part way of this magnitude, which means the probabilities are pretty strong that the next day would move to the continuation that these two moves now equate to the move of the move prior to the doji sandwich. With that, it allowed us to be buying immediately on positive trading this morning, getting in positions very early. Where's the target? Obviously the top of the trend channel, which is the implication is we still have some more upside in this market. And today's positive trading was confirmed with the NASDAQ gapping up through the resistance level after this slow curve pennant formation breakout, which also implies there's going to be more upside. So when there's more upside and the investor sentiment hasn't changed, it allows investors to stay with positions that might not be forming exactly as expected, but still in an uptrend. For example, our recent recommendation on IMPV was based upon the Morningstar signal, the close above the T-line, and notice what they couldn't do all the way up. They couldn't close it back below the T-line. A lot of people in the chat room were getting a little bit nervous, saying, no, it's not going anywhere. Should we get out? Well, the fact that we could combine the analysis that the market in general was heading up, and this was not closing below the T-line, told us to continue to hold because investor sentiment was probably building up, getting us to move big like we saw today. And the whole point of this buy recommendation was that this came from $60 down to essentially $19, now on its way back up. Even a partial rebound could bring you back up into the in this area, giving you a good 60-80% return on your money. The fact that we could analyze which way the market was moving in general allowed us to get into SEM early, like on the open, because what do we want to see after a fry pan bottom breakout? Well, if they are opening a positive, that tells us that this is not going to act as resistance anymore, that we're probably now in wave 3, which is going to be the same equivalent move as this move down here, and we don't have to wait to see what's going to happen. We can be buying immediately and then being already in a profitable situation as the day goes on. That'll be it. We'll see you in the chat rooms.